Have you spoken with any government official and have you explained sort of the predicate model to them and what is their feedback on this?
A MoneyGram. MoneyGram is very expensive because there are a lot of intermediary costs that go into there. The way it's currently set up, if you have a bank account, there's certain things that you're able to take advantage of and have potentially reduced fees.
Who is the policy maker in this case?
Where that means we're actually giving up our expressivity as a user for how a transaction is executed. And we might actually care about that.
Hello, hello, hello. Welcome everyone to another episode of Pure's interviews where we talk to interesting folks within the space. Our last interview was with Aki, who was building a smart contract layer on top of Bitcoin. And today we're talking to Nikhil Raghuveera, who is building a policy layer on the new internet in what he calls it from a company known as Predicate, formerly known as Ethos Network. Nikhil Raghuveera is the co-founder and CEO of Predicate, which describes itself as a policy engine for smarter contracts. We'll dive more into more of that in the conversation. Previously, Nikhil is actually still a senior fellow at the Geoeconomics Center with the Atlantic Council, which is a key member in navigating changes in global economic and political policy. And he was previously the head of strategy and innovation at the Celo Foundation. So welcome, Nikhil. You have a stellar educational background and work experience. Why the need to shift from the structured world of policy to the crazy world of crypto?
Yeah, thanks for having me here, Akash. Really excited to have this conversation. So yeah, I think the reason why shifting to crypto is you spend time in a lot of the traditional financial spaces and realize that there's a lot of ways to kind of make a better system, right? And that kind of goes across from the standpoint of thinking about intermediaries, the movement of money, the inefficiencies that come about from the current way we even think about money. And so that was my big interest of crypto. Is it particularly started around this idea that I was quite intrigued by stablecoins as a mechanism for emerging market payments, especially for parts of the world when you don't have strong financial infrastructure and you need more inclusive mechanisms. And so that was really my entrance into crypto. And from there, actually, the way we think about blockchain technology is it is a paradigm shift, right? Historically, we've almost always, as it's related to technology and finance, we've always thought of kind of traditional intermediaries to be responsible for facilitating activity. That's how everything has been set up. But if you go further back in human history, intermediaries were not necessarily the same thing, not on the same the scale and scope that we see today. And that was really the opportunity here when we think of crypto is, wait, we can actually build a new kind of technology layer, a new financial infrastructure that is fully decentralized without intermediaries. And there's a really unique opportunity for more ownership around that entire system.
Let's double click on the intermediaries aspect, because I think this is like a generational shift, right? Whereas the Gen Z millennial generation don't know what intermediaries are. In the previous generation, like our parents' generation, roughly the same age, the intermediaries would have been from a central bank to a commercial bank to maybe like your local stockbroker in this case, right? And now we have bypassed all of that and having very little intermediaries. So could you sort of paint a picture of what the intermediary system was in, let's say, the financial payment sense as it relates to stablecoins, and how that has changed from, like, say, the previous generation to this one?
Yeah. So let's take a payment system, right? So if you're sending money, and I'm not going to go through all the aspects, but high level, you're sending money from one part of the world to the other. In order for you to do that, it has to go through a series of different banks. You have different banks that are responsible for sending money. So, I decided to do a wire from my bank to another one. In order to do that, you're then sending it from that bank my local bank likely has to send it to another bank to then send it to another bank. Eventually that makes it to the correspondent banking system in order to send money to a bank in another part of the world, who then kind of distributes that out and sends it eventually to that final endpoint. All that relies on a correspondent banking system that's actually based out of the US. The interesting part here is, let's say you're sending money from India to Dubai. it's very possible that that also goes through a US correspondent bank. It actually ends up getting routed through the United States, even though it has to just go to Dubai, right? And in this process, especially when you're doing smaller types of payments, you have different intermediaries that are taking a cut of that. So if you've ever tried to send some type of micropayment, you are going to invariably have different types of fees that take up. And sometimes for smaller wires, it may not be there. But if you've ever tried to use something like a MoneyGram is very expensive because there are a lot of intermediary costs that go into there. And so you're able to, the way it's currently set up, if you have a bank account, there's certain things that you're able to take advantage of and have potentially reduced fees. But if you don't have a bank account or you're trying to use some other type of system, let's say you're trying to use mobile money, these things start adding up quite a bit. And in the case of something like a blockchain-based system, you're not reliant on banks anymore. It's through smart contracts, especially when it comes to decentralized stablecoins. Centralized stablecoins starts getting a little different. If you have something like Circle that still heavily relies on the banking system because Circle's collateral is held in banks, but something like Mento on Celo, CUSD, or DAI, right? It's not reliant on a banking system in the same way. And so in this case, it's all distributed across a blockchain system. And that's really the opportunity here. And then the additional value here is that when you hold that DAI or CUSD in your wallet, it is actually yours. It's not sitting in a bank that is under collateralized, right? A banking system never holds 100% of the collateral. So if you want to go and withdraw your cash, you can, but there's never enough collateral there for everyone to be able to withdraw. But in the case of a stable coin, if it's in your wallet, it is truly your money. And that is global, right? You can move to anywhere in the world and still have access to that same value. That's something that is very, very different when we think of ownership and we think of the movement of money and whether you actually have custody over it and how do you actually cut out a lot of the different fees which you otherwise would be facing.
So what percentage of, say, the current stablecoin market, you mentioned USDC and Celo, one very large and one small, but it's increasing adoption in smaller economies, especially. What percentage of the stablecoin market is, say, backed by real world currencies that are still held in bank accounts, physical bank accounts, like USDC has reserves and deposits of USD, versus some that have typically on-chain storage and backing, which are custodied on-chain, which are truly stablecoins that are disconnected from the banking system. Can you just explain that split and also sort of quantify that in terms of a general percentage?
Yeah, I don't know the exact breakdown. Unfortunately, that's something that you can probably find on Artemis or on Dune. This is actually a really interesting question because it gets to some of the things that we have to really still solve for in this industry. So take something like DAI that is a decentralized stable or even CUSD. A significant portion of their collateral is still backed by USDC. So it is on-chain collateral, but that collateral is being backed by USDC, which I think is philosophically, I think that is something that we have to change over time. The idea here is, of course, that you can change these things over time. Same with Tether, right? USDT is the largest stablecoin globally, and that is maintained by a centralized entity as well. So we haven't fully broken away yet from centralized issuers or stablecoins in terms of total market cap. And I think some of that is because we still kind of trust on these centralized parties. And then you've had kind of some of the decentralized stables that have had problems. But I think that is a world that we're going to. And then you have other groups as well. Like I think, for example, M0 is a different stablecoin that is saying, what if we don't rely on the banking system and utilize treasuries and other aspects? So you are going into that world. I will say, though, that being said, at the moment, still a large portion of that like large dollar amount of movement that happens with stablecoins are primarily Tether and USDC. And so for that, it is still tied to a banking system at the moment.
So the trust game, right? The more people trust on-chain stable coins, the more they'll adopt it.
Yeah, the thing is right now here, like you're asking about, well, there's two layers here, right? The earlier question was around fees. The other one is around trust. Around fees, Circle and Tether don't collect a transaction fee when you send USDC or USDT, right? So if I send that on the Ethereum blockchain, on Arbitrum or any other blockchain, on Optimism, Celo, anything like that, there's no fee that's imposed other than gas fees, right? But Circle and Tether are making money by holding collateral and then earning a treasury return on that, roughly around 4.5% or so at this point, maybe 4%. Now that's the payment component. Then if we shift it over to trust, so we are still trusting Circle and Tether. In the case of Circle, we are trusting the banking system the case of Tether, we are trusting Tether to have sufficient collateral, but they're not taking fees. And that's where when you start moving to decentralized stables, blockchains solve the first part, which is getting rid of fees. We still have to sort out and really get to the aggregate of trust, where the largest stablecoins should eventually become things that are disintermediated from the banking system itself. At least that's what I think.
I feel like you've thought a lot about this while at Celo, while innovating at Celo Foundation. How did that or the learnings there take you to build out Predicate?
So Predicate is a direct byproduct of what I was working on at Celo and what we were thinking about. So Predicate is different. Predicate essentially is designed to simplify transaction prerequisites. So how can you seamlessly add prerequisites, pre-transaction rules into anything that is on chain? So your smart contracts, your solver networks, your sequencers, really anything from that fashion. And a lot of that came from, even while working at Celo, is that there are prerequisites you might have as it relates to an application. Right now, developers go and build that manually themselves. They use historical on-chain information or off-chain information to build those prerequisites. So let's take a few very simple examples for this, right? So let's take a bridge, like a token bridge that needs to put in place some type of anti-money laundering policy. Why? Because they want to prevent, a sanctioned entity or an exploit from moving funds out through that bridge. And right now, some of your bridges already do that. But in order to do that, you need to use a number of different sources of information. You need to have an origination set of addresses. So that is, let's say you're thinking about an exploit. You want to prevent an exploit. An exploit, let's say, happens on a chain, and you're like, wait a second, we don't want this exploit to go through our bridge, right? You have a bridge provider. Now, for them to do that, they need to say, first, they need to identify the exploit. Then they need to say, wait, this exploiter is now moving their funds to different addresses and different wallets on that chain before they then bridge it out, right? They're trying to essentially launder it. So how can you incorporate all these different pieces in such a way that you prevent the movement of funds? And then similarly, how can you do that in a decentralized manner that ensures openness, verifiability, and liveness for that bridge? Because you don't want that check to go down. You're trying to do that pre-transaction check. And so it's a case that we saw that for Celo, for other chains, as well as it relates to things such as like stolen funds, money laundering, automated executions. You can have an RWA project that says we need to re-collateralize our reserve because interest rates changed, right? It's again like some type of pre-transaction requirement that has to then be executed. And so we saw this world of complexity there, and transaction activity just is getting more and more complex in the world of both infrastructure and social applications. And so how do you abstract away that complexity? And the last piece I'll say, right, is seeing this from the Celo Foundation standpoint, and then thinking about the history of the development of the internet. And so if you look at any Web2 startup, they all have transaction prerequisites and verifications in any execution of transaction. So, you go on Uber, right? And you say, hey, I'm going to request a car to pick me up. When you submit that request, there's multiple stages in their backend infrastructure. They call it policies to really say, wait, how are we routing this transaction and how is this transaction going to get executed? So let's think through some of these steps, right? So Akash, you request a car, right? And so in this case, what are the initial prerequisites? What are the policies that Uber has in place? So 1, where are you located? Geolocation. 2, where do you need to go? 3, what is the most efficient pathway? 4, what is your Uber rating? Right? So those are some initial things. Then on the other side, you have to say, okay, great. We need to match, taking these pieces along with, I'm sure, a number of other items, they need to match you with a driver. So then the driver standpoint too is another set of pre-transaction checks. What is that driver's rating? How far are they from you? Are they driving an Uber X, an Uber XL, an Uber Black? What type of car do they have? Is that actually what you requested? Where do you need to go? Are they able to go to that direction or not? All of those different facets, there's a full set of so much different complexity of pre-transaction checks that are happening before you're even matched with your driver. And so for all of that, that is stuff that we were like, this is going to continue happening. And I'm not saying that Uber is going to be on chain, but rather any application is facing more and more pre-transaction complexity. And there needs to be a way to simplify and abstract that away for developers and for users. That's really the world that we're going in. And that's why we started building Predicate.
So thinking through this Uber example, right? Like the example that you gave where I book a ride, and Uber has these pre-transaction policies within it that differentiate between route, direction, type of car, cost, etc. Is the example of a smarter contract, which you have outlined in your website, right? And the one step below that is a smart contract that most, like at least smart contract based blockchains, programmable blockchains have in place, where they take you from one end to the other. I want to make a transaction, I want to swap a coin, I want to lend a coin, and they just take you from one place to the other. But a smarter version of that would be, I'm thinking through things and you tell me if I'm right or wrong here, is a smarter version of that would be, let's say I want the best rate, I want the most liquid rate, I want it to be routed through the least number of places. Like you mentioned, I want it to be routed in a place where there are no bad actors on the other end, people who have laundered money, and my address is then tagged from a criminal authority, and then I'm investigated for some reason. Is that how a smart contract becomes, say, a smarter contract? Can you explain that difference within that in specifically with like an on-chain example?
Yeah, I think that's right. So right now, smart contracts are designed for this type of execution, right? But there's a limitation to what a smart contract can do. A smart contract doesn't have the computation to be able to do more custom types of things. A smart contract is not able to immediately leverage computation over historical on-chain activity, right? You need an archive node for that. A smart contract is also not well designed for any type of off-chain call. You need some type of Oracle system to be able to do that, right? This is why you have oracles like Chainlink or Redstone or Pip, all of those things. And so in this case, what we're saying is the future is you're going to have more and more of that complexity as it relates to the pre-transaction check. And that's really where we're honing in on, is that aspect. Now, this gets you into the world as well of like some of the co-processors, right? So some of the ZK co-processors like Lagrange, we're good friends with them. They're focusing on how do you make smart contracts more effective from off-chain computation utilizing ZK. They're saying that you can get better execution, be able to do new things that just you can't compute from a smart contract standpoint. For us, where we are focusing on is all the pre-transaction verification. That's the world that we operate in. That's how we're optimizing our entire infrastructure. And the entire infrastructure is designed to really issue signatures. So let's take an example of this to make this more explicit for that type of complexity. So Aleo is a privacy blockchain that recently launched, right? So they just had their mainnet go up about a week or two ago. In this case, they had a governance proposal that said, hey, we want to have some compliance best practices for our bridges. We don't want, like stolen funds to be able to come through. We don't want a sanctioned entity to come into the privacy blockchain and use our privacy blockchain to launder funds. This is a requirement for bridges. This was a governance proposal that was passed by their ecosystem. It's not something that was centrally determined. Now, in this case, for your bridge, how do you incorporate that complexity? How can you set those pre-transaction checks for what types of funds can go through? And so in this case, this is what we essentially are able to power, right? So in our case, you integrate something like Predicate for your bridge at the smart contract level. And then you say, here are the different requirements that we have. If you are a sanctioned entity, or if you have received a certain amount of funds from a sanctioned entity, you won't be able to bridge those funds. If you were involved in a recent exploit on, let's say, Ethereum, and you're trying to move your funds, you won't be able to do that. In this case as well, they're also setting some rate limits, because if you have more than a certain volume, it's like, wait a second, there should probably be some type of cap of how much can be moved within a given day by any address. And so it's all those types of pieces. So they had a governance proposal on this. That's an explicit example of saying these are pre-transaction verifications. In this case, it's an anti-money laundering example for compliance, because a privacy blockchain cares a lot about that, given that they operate in the United States.
All right. Compliance is, of course, a key aspect within this, or a key use case within creating these pre-transaction requisites. Could you outline a few more prerequisites for a larger retail user base?
Yeah, let's take another one. So let's say we can go into the intent in the world of intents. So intents, normally the V1 version of intents, maybe even a V0 version of intents right now, is for swaps. So, I want to get the most efficient price for when I'm swapping an asset to another. And so that most efficient price, instead of me going and finding the the different dexes and figuring out the best location, you can use an intent. You can express an intent of finding me the best price for this asset. And a solver will go and do that for you. That's V0 of an intent system. But we give up certain things in that intent right now. We are leaving it up to the solver to execute the transaction for us and determine the best pathway. Now, if we think of the future of intents, and as that leads into things like chain abstraction, that means we're actually giving up our expressivity as a user for how a transaction is executed. And we might actually care about that. So let's say I'm bridging from a large amount of money from one chain to another. I would likely want to use a more decentralized bridge rather than a centralized bridge because I don't want my money to be at risk. But an intent system, a solver might say, oh, no, wait, but that's the cheapest option is a centralized option. So we're going to route it through there. But I'm going to say, wait a second, no. Like I actually have a risk-adjusted return here. My risk-adjusted return is that I wanted to go through a more decentralized route. Or alternatively, I might want to go through a bridge that is planning to go for an airdrop pretty soon. So I'm going to optimize for places that are set up, that are thinking about an airdrop. This is expressivity, right, from a user. You're giving some type of additional parameters or requirements for how your transaction is executed in an intent system. And that's something else we're able to do. We're able to give a user the ability to express how a transaction is executed, not just the execution itself, but how do they want their transaction to be executed fundamentally. So that's another use case outside of AML that we can start envisioning a world of just much more expressivity of transactions itself.
So is the trigger for making, or is the creator of these pre-transaction requisites the user itself who's initiating that transaction? Or is there a larger sort of, you mentioned like an operator model within that, right? Within your policy doc. So who is the policy maker in this case?
The policymaker is it depends on the type of integration. If it's an application, it can be a developer, it could be the multi-sig, or it could be a DAO. So it's creating a pre-transaction rule prerequisite for that application. Now, if it's a more user-based system, so if it's an intent, a smart contract account, if you yourself are running, let's say, Akasha's solver, right, you can actually put in place requirements for what transactions your solver actually executes. In that case, you're the user. So when we talk about these policies, the policy can be set by anyone who it's relevant for. You're the one who owns that policy. So that policy can be owned by an individual, it can be owned by a multi-sig, it can be owned by a DAO. It really just depends on the use case. Now, your question then is like, so what is this operator network we have? And why have an operator network?
Yep.
The operator network is responsible for enforcing that a transaction meets that policy. You want to make sure that it's actually there. So there's two ways to do this. One way is that we build a centralized system that does a transaction verification. You issue your policy, and then you have a centralized system that's responsible for validating every transaction to say, oh yeah, this transaction meets the policy requirement. Our concern, though, when we were doing that is that you're now relying on a centralized party to validate. And if the centralized party says, you know what, we don't care what the rule is here, we're going to validate whatever, or they're going to say, you know what, we're not okay with this policy, we're going to do our own thing. They can quite literally censor an application or censor a user because they can just go and block transactions whenever they want. That's a fundamental problem if you think about on-chain activity and if we're thinking about decentralization. So an operator network here is crucial because we are building a distributed network such that you have a network of operators that are responsible for enforcing that a transaction adheres to a policy. If an operator behaves maliciously, they're slashed. They have economic security, they're slashed. So it's all about having an open, verifiable, and ownable system. That's really crucial here when we're thinking about on-chain activities. And an operator network becomes really important for that.
The model is very similar to, say, a validator network or a restaking operator network within who has responsibility to make sure that the entire network adheres to certain criteria or policies in this case. And if any network participant is not, they are disincentivized or they're penalized in this case.
Exactly, that's right. And so here you have an operator network. So an application, let's say we talked about the Alia one, they can set a quorum on the number of operators they want. The operators issue signatures. So they validate a transaction, they issue signatures. You can set the quorum, and if an operator behaves maliciously in their signature issuance, they of course can be removed, they can be slashed. There's a lot of things you can do there.
All right. So in terms of the sort of members within this, within the predicate model, right? There are a few entities. Of course, there's the policy, there's the operators, which you spoke about. And
Yep.
you also mentioned that there's an off-chain infrastructure angle, which acts as validators to broadcast transactions and aggregate signatures. Uh, how do these, can you explain the first two entities? How does the off-chain infrastructure angle sort of work within this?
Yeah. So the off-chain infrastructure is the operator network. So they're off-chain operators. So we use EigenLayer as an AVS for economic security. And so they operate a bit like off-chain compute. So they are the ones who validate transactions. So the on-chain component here is the policy is actually stored on-chain. So if you're issuing a policy, that policy is stored on-chain on Ethereum. The operators are off-chain participants. They reference a policy on-chain, see if a transaction adheres to it, and then they issue the signatures on-chain. Then we have a third part here, which is your actual information providers. So taking a step back, Predicate is really fundamentally a three-sided marketplace is really what this becomes. So you have the operator network responsible for enforcing a policy. You have applications who have demand for a policy, demand for policy enforcement. So they create a policy and they demand policy enforcement from operators. Then you have external information providers. So external information providers are any type of off-chain database, off-chain information that wants to be able to get economies of scale, and they supply information for applications to create policies. Because policies all utilize some type of information to be able to make a determination of whether a transaction meets a requirement. So here you can have both on-chain information providers and off-chain information providers. An on-chain information provider, for example, is historical blockchain information, right? That is something that you can have. Our operators run archive nodes, so that's historical on-chain information. Off-chain information providers can be, anomaly detection platforms, risk provider platforms, KYC provider platforms. Like, for example, if you're doing a lending protocol, information as it relates to thinking about a credit score, any type of off-chain information that is necessary to be able to create an on-chain pre-transaction rule. So that's our three-sided market. It's information providers, operators, and applications.
And the individual users who want a policy to be enforced will sort of create that demand ground up for the applications itself that they use. And the application will ask for that policy from the operators and ask for it to be adhered to. So that's more of a ground up demand. Whereas I, as an individual person, can say, route my funds through the places where, or the chains or the applications where I can get airdrop rewards, for example.
Yep. So it very much depends here on the use case. If you're from an intent approach, those things, it's much more of a user-based model. But think of it this way, that some of the applications themselves might have pre-transaction requirements that they want to put in place, right? So that is built by the application team or by their ecosystem. It doesn't have to be by an individual. So an example here is, let's take an RWA project that has has a reserve, right, of assets, and they want to be able to recollateralize that if certain things happen on chain or off chain. That's where that core team for that RWA project are going to set that policy. It's not the user that does it; it's the application team that's doing that. So that's their developer team. It could be an individual developer. It could be their whole team that makes a decision, whatever that is. But they're setting the requirement. So here really just depends on, when we talk ground up, of who defines those transaction prerequisites. In some cases, it might be the user. In some cases, it might be the application or the DAO.
So when you sort of started off with this model, was there a lot of demand from applications that said that, hey, there are policies that we wanted to be adhered to, but there's no system of validation to sort of create that structure? And was it, say, like a hard convincing curve to tell various applications that policies are to be adhered to? You want them, I can create them and have it secure. And did they sort of have custom requirements of policies as they started working with you more deeply?
So when we first started this, we spent a lot of time first figuring out if there was actually demand for it. If there wasn't, then we wouldn't have gone and worked on it. And part of that early journey was, one, there were pain points that we were facing in the Celo ecosystem. And so it's like, we'll need something like this for different applications, as well as like infrastructure that Celo Labs entity was managing. So we knew it from like that part. But then it was then talking to a lot of other partners in the Celo ecosystem. So projects like Axelar, Optimism, Uniswap Foundation, and then even we were exploring some different privacy use cases. So then Alio, Aztec, and others. So we spent a lot of time like doing a customer research to say, hey, wait, what are the different policy requirements you might have? And we didn't really call it policy at the time. Initially, when we first started, we actually focused pretty heavily on the anti-money laundering use case because my background in policy world, it was something that came up a lot from current and former regulators. And it was a pain point we were facing at Celo with a lot of our larger partners. So we knew that that was going to be an initial use case. And we spent a lot of time doing the customer research to say, hey, wait, how are you currently doing it? Do you have a solution? A lot of projects didn't have a solution in place. So we said, wait, we can actually go and build this. We have an idea of how to build this. So we started there on AML. Once we got a little bit further, though, last year we did what we call the mom test. The mom test is there's a book on this, which is that your mom always generally says, hey, if you tell your mom you have some cool, brilliant idea and you're really excited about it, your mom oftentimes will be like, oh, I'm very supportive of this. This is a great idea. That's what moms do, right? But what you need to do really, if you're validating a new use case or something new that you're building, is you want to actually go and validate it from potential partners. You need to validate it from the market. So that means you have to go and be really comfortable having projects tell you that, no, what you're building is not useful. We would never use it. We don't really see a need for it. So you have to do a lot of customer interviews. So we did a ton of customer interviews last year in the fall and found that one, yes, AML was something that was validated. We had confirmed it. We're like, great. But during that same time, we realized that there's a much broader need as we think about transaction prerequisites and how to abstract that away, especially as it fits into what we were talking about earlier of the evolution of this industry in the same way that we saw the evolution of Web 2. And if you start thinking about it from that time horizon, we said, wait, it's not just AML what we're trying to solve for here. We have to build something that's much more sophisticated around the universe of pre-transaction rules and how we can execute that. That's really how the world that we took. And that's how, we have initial launch partners that we're going live with very soon because we spent time validating it earlier, and then we're continuing to add new use cases as we go further along.
So from that initial validation stage where you conducted the mom tests and had user interviews to now you have pre-transaction rules where you can migrate ownership of these policies to, say, multi-sig wallet or DAOs as well. How did that move go on? And can you explain sort of the timeline of that move itself?
For us, that was actually the intention from day one. And the reason why was when we first validated, that there's a need for pre-transaction rules. The next question is wait, so does it need to be centralized or decentralized? When we first started with a more centralized view around it, this was in the earlier part of last year. Then as we started talking to some of the larger projects, for example, one of our core partners is Axelar. Axelar was like, it has to be decentralized for us to ever think about integrating anything like this because Axelar spent so much time thinking about the decentralization of their cross-chain messaging protocol. This needs to be something that is decentralized because you're essentially, in this case, what we do is any transaction that goes through an application is checked by us. So we are essentially that first line of any transaction. And if that is a centralized point right there, it becomes a central point of failure. And you also can't guarantee liveness. And so when we're talking to some of the more sophisticated on-chain protocols and teams, they're like, it has to be decentralized. So we said, okay, great. So in that case, you first think about a distributed operator network for decentralization. But then that logically leads you to the next part of who has ownership over that requirement? Is it us as a labs entity? Are they trusting me to maintain that requirement? Because if so, and let's say I disappear, now suddenly you put in place a pre-transaction requirement that you have no control over. You have no ability to change it. You're having to call me and say, hey, I need this updated. And you're hoping that I'm, available, right? And so it was when we said that we needed to be more decentralized, it has to be a distributed network, that very much logically takes you to the world of, okay, wait, so the ownership of the policies also has to be held by the group that is most relevant for this. And so in that case, if we're thinking about on-chain applications, it's not always an individual. It should be a multi-sig or a DAO. That's where the world of applications go, right? Is that over time, you are trying to further and further decentralize them. So we need to be able to meet the evolution of decentralization for on-chain applications and on-chain communities. And that takes us more broadly into kind of our philosophical view, is that At the end of the day, what are we doing here? Throughout human history, we associate transactions are an expression of our values, right? So when I go and interact with someone, it is someone that I trust who I can interact with, right? I'm not going to interact with someone who I can't trust. And what you are is you're actually creating communities for community aligned values, community aligned views, and the values express rules, right? You get rules that are expressed based off of your community aligned values. And so if you are creating on-chain communities, you need a way to be able to create shared rules, shared norms. And if that's the case, you don't want a central arbiter of that. You need a decentralized way of doing all of that. And so that's really that's kind of that long-term arc is what we're doing is we are enabling the creation of true on-chain communities and shared values itself.
And communities don't want it to be built ground up within their own pre-transaction logic, whereas I as Axelar will create it for me. Or I as Axelar will outsource this to Predicate. It would be I as Axelar would outsource this, not outsource it, but also push it to the community, which is the infrastructure is what you have created. The consensus mechanism is what you've created. But ideally, you're not the one who's creating these pre-transaction logics. These applications will create it, and it's enforced by an operator method, which has collateral so that it'll be slashed if they don't adhere to it. And that is it is more decentralized than a centralized model that Axelar would create ground up or Predicate would create singularly.
That's exactly right. We're creating the framework and the infrastructure for anyone to be able to put in place their transaction prerequisites. Otherwise, they're having to go and create something that isn't part of their core business logic. They're trying to do the pre-business logic. And we're like, one of the beauties of on-chain and building on-chain is you can actually create building blocks, right? That's what we're always doing, right? An application that wants to have some type of cross-chain activity, they're not going to go and build their own cross-chain messaging protocol. They'll go and use Axelar, right? And they'll say, hey, Axelar is decentralized, so we want to use that. Uniswap is a good example. Uniswap for cross-chain governance uses Axelar and Wormhole. Uniswap is one of the most sophisticated labs teams, but they didn't say that we're going to go and build our own cross-chain messaging protocol. They said that we're going to use Axelar. And so in that same case here, we said, wait, we can build a sophisticated decentralized framework for anyone to be able to use so that you don't have to go and build it yourself. You can go and use this to now be able to build your pre-transaction rules.
I'm sure government organizations would be looking at this very favorably, especially on the compliance angle, right? Of course, the intent angle, they don't really care much about, users do, but the compliance angles with, say, Tornado Cash, other mixers that are out there, people don't want to use or don't want to route trades through. Have you spoken with any government official and have you explained sort of the predicate model to them, and what is their feedback on this?
Yeah, we've had early conversations. I think the way a project interacts with a government, especially earlier stage, right, is the way we approached it is a lot of my network is also former government officials as well as some that are current. And so when we were ideating on this, part of this was like, wait, so what are pain points that you're seeing, especially on the anti-money laundering side, right? So if you go to FinCEN or OFAC, US FinCEN or US OFAC, what are the things that they're trying to solve for? What's very top of mind for them? So it was very much when we were doing the initial anti-money laundering component we're like, what if we can actually build the protocol to be able to solve this? And the US Deputy Secretary of Treasury has talked about this quite a bit, that he was like, the industry has to build the tools. And so he said, what if we can build the tools, but we can make it one even better? What if we can build the tools and have it decentralized so that way it's a ground up effort by the industry rather than a top down effort by a regulator or by a centralized company? That was the other part that we said was like, what if we can bridge that gap between the cypherpunks of the world and the more traditional folks around the world? That was really how we saw it.
And is that something that they chimed in and were like, that's the model we want to go to? Or were they more like, no, we want to at least have some more control on the pre-transaction logic that is mentioned rather than it being application driven?
They don't specify any way of how they want it done. A regulator, usually for them, it's, are you solving the problem or not? That's really what they care about. And so they're not going to say that we need to be on the multi-sig or we need to be the one who they're not going to build their own solution. It's rather, hey, there's certain problems that need to be solved. Now, how are you going to go solve it? Use the tools to be able to go solve it. You need to do something. You need to show best effort and utilize best practices. And that's really where we come in.
And I'm sure your background as a senior fellow at the Atlantic Council, Celo, and now Predicate, and of course, strong blockchain knowledge is very useful for them, right? Like where they see you, they look at less cyberpunk, more straight shooter from a policy point of view. Is that an easier convincing angle for them?
It definitely helps. And I think it's also having the right network and partners, right? So it's working with some of the larger projects in the industry, ones that also interact with people in DC and things like that. So it is working with kind of the different projects for that. So I think there's different styles to it, but it is one that for us, it's important to be able to kind of show that, hey, we can build really cool technology that actually solves core problems to enable growth for the industry as a whole.
So, what does the future look like for Predicate Network, or Predicate in this case? Are you looking to expand horizontally with, say, more policy framework? Are you looking to expand to more DAOs, more chains, or integrate, or not, or maybe not integrate, but speak to a lot of government policy creators and sort of work with them to ensure that transaction logic is as safe and clean as possible?
So our big focus right now is just continuing to add more use cases, getting more. Actually, the first part is actually getting live. We're going live pretty soon. So a lot of our kind of mind share and effort has been around that. So doing that, picking up our marketing narrative as well. We've largely been in stealth for the time being, and that was intentional, but starting to become a little bit more public. And then the big thing is, of course, continuing to get more integrations in different use cases. So we're working with privacy protocols, RWAs, intent groups, among others. And so continue to widen the number of use cases and integrations that we're getting on our network. That's the highest priority.
Awesome. I think this year is going to be huge for you. Is that will be the key focus area, and I feel like personally I've learned a lot about pre-transaction logic. You mentioned this during the Road to DevCon where we hosted you, and that was super interesting. And thank you so much for sort of following up on that and having this conversation with me and with the PR team.
Definitely. No, thank you so much for having me as well. It's been great.
Awesome. Just for reference, if anyone's listening and they want to know more about Predicate, about you, could you just drop, say, your social links? I will be sure to link those in the docs as well. But if you can just mention that, then they can just double click on that whenever necessary.
Yeah, I think the easiest place would be probably to just go on our website. So predicate.io, predicate.io.
Awesome. And you guys are active on Twitter. Do you have a community on, say, Telegram or Discord as well?
Just on Twitter. We don't have a Telegram or a Discord.
Awesome. Good thing you mentioned that, because a lot of scammers will sort of create groups of Predicate and try to pump your coin, which I don't know if there is or isn't, but yeah, let's try to avoid that as best we can. Thanks so much, Nikhil, for speaking to us.